video, whatever you want to call it, because I'm literally just going to recap what happened this week. And I'm going to pick off exactly where I left off from last week in terms of what I expected. So here we go. All right. So I just want to make sure I'm recording. Am I recording? I'm recording. Okay. Last week we ended off here closing at around 522. I had took 540 calls from this all-time high right here. And I really like that as a target. I'm going to annotate this real quick. And sure enough, we opened at like 513, 513 and a half, 513.50, whatever you want to call it. And as soon as that happened, I started buying calls. So since we opened so low and we are only buying like 1 week out in expiration, it's going to take a lot of volatility, like something like this candle, like how much movement happens from like the high at 536 to the low at 515. It moved 20 points, $20 in that day. And so that's what would need to happen at least in one of those days to help us get to that target in time, because that's the biggest thing. Time, it's one of the biggest things that plays a factor in what we're going to buy. And so at the start of the week when we opened, I think around like 514, I think around here, I was buying 534 calls and then 540 calls. So those were about $50 if I'm correct. I know I have my receipts right here. So I bought two 540s for $22 at an average price of $22 per contract. And then I also bought one contract of a 534 call, which is a little bit pricier, and that one came out at around $50. So in total, I invested about $94 on the week, which is about almost 10% of my capital, that my original capital that I invested. Last week we made about what was that? $40, $41, something like that. And yeah, like that's cool. It's whatever, you know. This is options trading, so it's a lot more volatile. It's not like it's not rising by 1, 2, 3% every day, as it would like passively. Like if you're investing in Amazon, you're buying a stock share. It's completely different, right? So just a reminder. And then let's see what else happened throughout the week. I think that same day, I sold my whoa, hold on. Oh yeah, okay, I'm getting one step ahead of myself. That same day on Monday, I decided to sell my call. As you can see, it was an upward candle. If I'm buying that for 514 and the high of the day is around 520, I sold my 534 call for an average price of $84. So the one contract I had that I bought at $50, I sold for $84, which means I got $34 out of it, right? I also sold one of my 540 calls, which is this one up here. They're all calls. They're all in the same direction. Just lower the further away. All right, I'm gonna say that the price of where we're at. For example, right now we're at 522, almost 523. The closer you are to that number, the more in the money it is. Does that make sense? So if I'm buying 540 and 534 calls, it's further away from being in the money. By being in the money, that means that the contract's on your side. Like if you have calls and you had 517 calls or 518 and it's at 523 now, you're completely in the money because it overshot what you wanted it to do. Now, if I'm buying 534 calls and price is a long ways from that, I'm not in the money. Okay? And especially if the contract expires on Friday and we are this far away from our target, what does that make the contract? worthless. Okay. Now, if it ends on Friday and we're above the target, or let's say we had shorts, yeah, whatever. I don't know. 534 puts. Yeah, puts is the right word to say. 534 puts. We would be in the money. Anyway, what I'm trying to say with all of this is that my 534 calls were more volatile than my 540 calls because they don't move as much. The closer you get, the more that delta plays a factor in it, and delta is how much it changes per dollar. So, and that increases the closer you get to being in the money. All right. And so at that point, I was pretty content. I had made $34 with that, and then another 18, which is what, $52 on the week. Or am I tripping? No, 34 plus 18. Am I tripping? No, that's right. And so I decided, okay, $52. And I still had one contract left that I bought for $22, right? So if I decide to let it ride the rest of the week, that last contract, and if I let it if I were to let it go worthless, which would be worth zero, 52 minus 22, $30 on the week, which is, a step in the right direction from 40 last week, which is pretty good. But something in me was like, you know what? I know the experience of letting stuff ride when I know I could have just taken profit. And this is where greed comes into play, because I could have been greedy and let this thing ride. And even like if it went worthless, I would have been fine with that as well. But oh, bless me. I'm partials always pay, and if there's money I could collect, I'm gonna collect it. Literally, I wanted to see my profit for the week, take it, and then leave it. Like, just because I have a contract doesn't mean I have to let it ride out and pray that it gets to where I want so I can make a stupid amount of money. Like, no, that's not how it works. You can't be greedy with it. Rather, you should collect your money where your money's due. And that's exactly what I did this week. So on Tuesday, if I'm right, yes, on Tuesday, I sold my second 540 call, which was the last one I had for the week. This was the last option contract I had remaining, for $30. Now, I remember saying a sell limit for like 45 or something like that, because it was like really close to there. It was 44, so that would be 100% return on my $22 investment. You get what I'm saying? And it didn't get filled. And so I was like, you know what? If I take this 30, yeah, it'll only be $8, whatever. But that $8 has, like, collecting that, because it didn't go above that for the rest of the week, surprisingly. Okay, so even though price continued rising, it was still below 540 up here, and this is when the contract expires, right? So at the end of Friday, if you're not at 540, that contract is worth $0. And so me selling that on Tuesday right here was actually the best decision made, because it didn't get back up to $30 the rest of the week. I don't believe, because I checked it a couple times. Yeah. And so the other thing that made me sell was, like, if I sell it right here for 30, I will have made $100 in the past 2 weeks from doing this, and yeah, that would be a 10% return on my $1,000 that I put down for it. And so a 10% return in 2 weeks is, I would say that's all right. That's pretty good, and going forward, like, I didn't have to participate with the markets the rest of the week, because this is just a bunch of stale movement. Yeah, it's cool to trade, and I did, but after I was out, I'm done with the week. Like, I don't really have any interest anymore. Going forward, like next week, I'll probably still be targeting this, but I'm not gonna I'm not gonna keep using my blade when I don't need to, because that's just gonna make it dull. If I see something I like and I really really like next week, I'll use my real capital and invest it and see what happens. But I've come to the point in my trading career where I don't have to force anything now. And I think a big problem with that I struggled with in the past was that I wanted to make trading my only source of income, my only source of revenue. And that just puts so much pressure on every decision you make. And it kind of forces you to have to participate and push the button, and get into these positions when you don't even really feel confident about what's going to happen in the market. Next week, I'm not really confident about what's going to happen. If you look at the weekly chart, we've had 4 consistent weeks of up close candles, but have really gone nowhere. I don't like that at all. And so when there's no 100% direction of where price is going to go, I don't really feel comfortable trading those in that environment. If I'm going to put my money down, and a good chunk of it that I could be spending somewhere else, groceries, a new table, like, this is money that is very important. And if I'm not very confident in where price will go, I don't know why it took so long to find that. I'm just simply not going to put my money down on it. It's that simple. And saying it out loud is kind of crazy because I've heard it before, but my actions have said otherwise. But now it's kind of come full circle, and yeah, I get it now. I have the sting to remind me of what happens when I don't listen to that wisdom, right? So there may be a video next week about it, but we'll see. If you look at futures right here, you see how price closed just below the Friday closing price, which is a new week opening gap. And look how beautiful these wicks are. You had the open, look at where price opened at on Tuesday too, right above it, filled this entire new week opening gap, came back up, and then on Wednesday we opened a little bit below it, went to about the consequent encroachment of this gap. What was that? 434 3/4. This candle's low is 429, so just below it. Yep, about 5 points beneath it. And yeah, then it's good stuff. We have these relative equal highs right here. These highs, so much buy side liquidity right here, which, man, I'd love to see get taken out. And just higher lows as well. Bullish market structure, but still within a consolidation range. That's what it looks like to me. And so, going into next week, talking about this on a Saturday at 12:27, I'm looking for calls still. That's going to still be the focus, but we'll see. If I don't like what I like, come Monday, I'm not going to force anything. So, yeah, that's about it for this video. See you next week, or next video. Deuces.